To the explainer. Today, we're jumping right into the Indian stock market to see what's on deck for tomorrow, October 29th. We've got this fascinating tug-of-war happening between huge global optimism and some really stubborn local resistance. So, let's break down what it all means for the Nifty.
Okay, so let's cut right to the chase. The expert verdict for tomorrow, the overall feeling is cautiously bullish. Now that's the headline, but the real story, the word you really need to pay attention to, is cautiously.
So what does that actually mean for your trades? Well, to get it, you got to understand the two massive forces at play. We've got this incredible global optimism fueling the bulls, but then we have these very specific resistance points where the bears are just digging in their heels. It's a classic standoff.
First, let's talk about the bull case, because the tailwinds coming from global markets are, well, they're not just strong, they're pretty staggering.
It all starts in the US. The Dow Jones just surged, as you can see, by over 337 points to hit a brand new record high. That is a massive psychological boost that just sets a positive tone for, well, pretty much everyone.
And it didn't stop with the Dow. Oh no. The tech-heavy NASDAQ also just rocketed up, adding over 432 points. That's a 1.8% jump to hit its own all-time high. I mean, this is a major breakout, especially for the tech world.
And look, this wasn't just a US thing. This was a full-on global party. The S&P 500, Japan's Nikkei, South Korea's Kospi, they all posted huge gains. This chart just shows you that optimism isn't isolated. It's a worldwide wave of confidence.
And that's not all. Back here at home, we're seeing really strong buying from our own domestic institutions. The technical charts are looking bullish. Things like the MACD and super trends are flashing green. Plus, you've got this buzz around a potential US-China trade deal and maybe even a Fed rate cut. Even the GIF Nifty is pointing to a positive gap-up opening.
Okay, so everything sounds great, right? A global rally, strong domestic buying, what could go wrong? Well, despite all that momentum, there are some pretty big forces pushing back, and you just can't ignore them. This is where that cautious part really comes into play.
So it all comes down to this one number, 26,000. This is a huge psychological barrier on the Nifty. The market tried. It really tried to push past this level, but it just couldn't hold on, which tells you that sellers are defending this zone like their lives depend on it.
And if you want to see that battle in action, check this out. This slide shows that tug of war perfectly. On one side, you have foreign institutions selling, but on the other, our domestic institutions are jumping in with massive conviction, buying up everything in sight, and basically keeping the market from falling.
And all of this uncertainty? It's captured perfectly by this thing called a doji candlestick pattern that formed at the end of the day. It's basically the chart's way of saying we're at a total stalemate. Neither the bulls nor the bears could get the upper hand. The market's just holding its breath.
Okay, so we've got bulls on one side, bears on the other, and a market that can't make up its mind. What in the world are you supposed to do tomorrow? Let's break down a practical game plan.
All right, let's get tactical. Here's your playbook, broken down into 3 scenarios. You've got a plan for a bullish breakout, a plan for a bearish breakdown, and then the most likely scenario, right in the middle, a range-bound market where you can trade between the clear support and resistance levels.
Now, no matter which strategy you're leaning towards, you've got to burn these two numbers into your brain. The support floor at 25,850, that's where buyers are probably going to show up. And that resistance ceiling we talked about at 26,000, well, that's where the sellers are waiting.
So let's put all these pieces together. What's the bottom line for tomorrow's session? What should we really expect when that opening bell rings?
I think this quote from the analysis just absolutely nails it. The key takeaway is to be optimistic. You have to respect the global strength, but you have to be ready for a real fight at that 26,000 level. You just can't get complacent here.
So what you can probably expect is a flat, maybe slightly positive open. The market's likely going to consolidate, just kind of churning inside a tight range while it tries to digest all this conflicting news. You can see the probabilities here. A 70% chance the market just kind of chills out.
And all of this leaves us with the big multi-million-dollar question that the market is going to have to answer in the next few days. Is this 26,000 level a brick wall that's going to stop this rally dead in its tracks, or is it just a launching pad, a place to catch our breath before we blast off to new all-time highs?
Hey, if this breakdown helped you make sense of all this market chaos and you want to stay ahead of the next big move, do me a favor and hit that like and subscribe button. You'll get more clear, concise explainers just like this one. Thanks for watching.